All right, let's talk about something really fundamental. When everything seems to be going wrong in the markets, where does all the smart money actually go? That's what we're diving into today, the world of safe haven assets.
Seriously, think about it for a second. The news is just a sea of red arrows, right? You see panicked headlines, everyone's talking about a crisis, and stocks are just plummeting. But all that money, we're talking trillions of dollars, it doesn't just evaporate. It can't just vanish into thin air. It has to go somewhere. So the big question is, where does it all run to?
And the answer? Well, it's actually pretty simple, but it's also really profound. It goes looking for safety. See, in times of total chaos, the whole goal of money just flips on its head. It's not about chasing high growth anymore. Not at all. It's about desperately trying to hang on to what you've got.
So there's a name for this whole thing. You'll hear people call it the flight to quality or a flight to safety. And it's exactly what it sounds like. A massive global stampede of capital away from risky stuff and towards anything that looks stable. But what actually counts as quality when everyone is panicking?
Well, that's where this idea of a safe haven asset comes in. Think of it like a financial storm shelter. The goal isn't to get rich in the shelter, right? The goal is to just not lose everything you own when the hurricane hits. So in the simplest terms, when the rest of the market is tanking, a safe haven is what you hope will either hold its value or maybe, just maybe, even go up.
And this chart, this perfectly lays out the two different modes the market operates in. You've got risk-on mode, that's when everyone's feeling good, confidence is high, and investors are chasing big returns in things like stocks. But then, fear takes over. The switch flips. Suddenly we're in a risk-off world. The goal is no longer growth, it's all about capital preservation. And that's when you see money just pour into the stuff on the right side of the screen, the safe havens.
Okay, so let's start with the big one, the OG of safe havens, gold. I mean, for literally thousands of years, through the fall of empires and the collapse of currencies, this one shiny metal has been seen as the ultimate store of value.
And this isn't just some old story, you know? History shows us this pattern repeats itself over and over. Just look at the 1970s with that crazy stagflation. As people lost faith in paper money, gold's price just exploded. Then, fast forward to 2008, the entire global banking system was on the brink of collapse. And what happened? Gold hit new highs. And even during the bizarre, unprecedented crisis of 2020, that same ancient instinct kicked right back in. Money fled to the safety of gold. So what is it about gold that gives it this incredible staying power? Well, for one, it's tangible. It's a real, physical thing you can hold in your hand, not just a number on a screen. It also has what people call zero counterparty risk, which is just a fancy way of saying its value doesn't depend on some company or government keeping a promise. And this is a big one. You can't just print more of it. Central banks can't just create it out of thin air. It exists completely outside the normal financial system, which kind of makes it the ultimate insurance policy if you think that system might have a problem.
But, while gold is the ancient king of safe havens, there's a much more modern one that completely dominates today's financial world, and that's the US dollar.
And when we say dominates, we really mean it. Just look at this. Nearly 60% of all the foreign exchange reserves held by every central bank on the planet are in US dollars. That's not just a slight preference, folks. That is the fundamental plumbing of the entire global financial system. So when a crisis kicks off anywhere in the world, what do you think everyone scrambles for? Yep, dollars. Demands just go through the roof.
But here's a really crucial point. When people and institutions flee to the dollar, they're not just, pulling out stacks of cash and putting them under the mattress. No way. They need a place to park all those dollars. Somewhere super safe, super liquid, and hey, ideally a place that pays a little interest. And there's one place that fits that bill perfectly: the U.S. government debt market.
U.S. Treasury bonds are, without a doubt, considered the safest financial asset on planet Earth. And why is that? Well, they're backed by the full faith, credit, and taxing power of the world's largest economy. I mean, the market for them is so incredibly deep and liquid that you can trade billions and billions of dollars worth without even making a ripple. In fact, it's the global benchmark. It's the risk-free asset that every other investment in the world is measured against.
Okay, but the world is never static, right? Things are always changing. So while gold and the US dollar are the absolute titans of financial safety, the whole landscape is evolving. We're seeing other contenders and even some brand new challengers step into the ring.
Yeah, for decades now, a few other currencies have also been seen as these little lighthouses in a storm. You've got the Swiss franc, for example, which is backed by centuries of political neutrality and a rock-solid reputation for financial stability.
And then there's the Japanese yen. Japan is the world's largest creditor nation, which basically means the rest of the world owes them a ton of money. So during times of global stress, you often see both of these currencies get stronger as capital looks for these little pockets of safety.
And that brings us to maybe the biggest, most heated debate in the safe haven world right now. Is the future of financial safety digital? Could something like Bitcoin, a totally decentralized digital asset, ever really compete with the giants like gold or US Treasuries?
I mean, let's just lay it out, side by side. On one hand, you have gold, with thousands of years of history. On the other, Bitcoin, which is still basically a teenager in financial terms. Gold is known for being pretty stable, while Bitcoin's volatility is, well, it's legendary, right? The argument for it is that it's digital gold, a scarce asset that nobody can control or print more of. But the critics, they point right to that insane volatility and the constantly changing regulations and say, no way, not yet. Honestly, the jury is very, very much still out on this one.
So at the end of the day, it all comes back to that one core concept we started with. When times are good, money chases growth. But when times get bad, money, it just wants to survive. Capital's almost like a living thing with instincts, and its number one instinct in a crisis is to find the safest port it can and just wait for the storm to blow over.
Understanding this flow of money, this flight to safety, is absolutely key to understanding how the world works during a crisis. It tells you everything about global confidence, about risk, about the very bedrock of our economic system. So I'll leave you with this to think about. In the next crisis, and there's always a next one, where will all that money run? Will it be the same old time-tested havens, or is it going to find a brand new home?